Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hello and welcome to the REI Classroom. I'm your host, Nav Athwal. I'm the founder and CEO of RealtyShares.com, a crowdfunding for real estate platform. Very excited to be joining you all today to tell you about how servicing and the rehab draw process work for a loan that you've received through a crowdfunding platform.
This REI Classroom real estate lesson is sponsored by UglyOpportunities.com.
Again, this is a topic very near and dear to my heart because I run Realty Shares, and we focus a lot on how the borrower can get more efficiency through our platform with not only a good funding process and closing process, but also through a servicing and draw process that jives and is consistent with the way they do business. So again, the process for crowdfunding in terms of servicing and rehab draws is not that different than a conventional lender or a hard money lender. But I think with crowdfunding, you're actually able to build a bit more efficiency into these process. So once your loan has been funded and the loan actually is closed and you've received the funds, then you are now in the servicing portion of the loan's life cycle. And even though your loan may have 20, 30 different investors that participated with check sizes as little as $1,000 that are highly interested in your deal and your loan, the servicing process is actually handled through the crowdfunding platform itself. So you don't actually have to make small distributions on a pro rata basis to 30 investors. You make a single payment through the platform. Our platform, RealtyShares.com, you'll have a dedicated dashboard where each month you'll get a notification asking you to make your monthly payment. You can also have an auto pay feature so that each month the auto deducts from your bank account if you don't want to have to worry about it on a monthly basis. So you make that single payment, then the crowdfunding platform handles the rest. It makes sure that that payment is then distributed on a pro rata basis to all the various investors that are participating in your deal with, again, check sizes as little as $1,000. So those small distributions are handled by the crowdfunding platform, not by you, the borrower. So that's the servicing piece. Again, not much different than what you would do through a hard money lender or bank. The only difference is you can actually do it all online through the website, through your dashboard. So it takes minutes. You can have an auto pay feature, very quick, very painless. The rehab draw process is a little different. Typically, you'll see this for loans that have the acquisition financing piece, but also a construction financing piece. So if you have a loan that you received 80% loan to cost on day one, you'll get 80% of the acquisition prices in advance, but the remaining funds for the rehab will be held back by the crowdfunding platform and administered through a draw process. The draw process and the number of draws is agreed to on the front end, so that happens actually prior to your loan closing and is set forth in the loan docs, usually the promissory note, the deed of trust. So you know exactly how many draws you can expect and what is required before you get those draws. So once you have completed a phase, it could be up to 3 phases typically for a crowdfunding loan, and you're ready to submit the request for draw, then you go to the crowdfunding platform. Again, you deal with the platform, not with the individual investors, and request that the draw be made. The crowdfunding platform will then typically ask for receipts that prove that the work's been completed, may send an inspector to the property to verify the work's been completed. That can typically take about 24 hours. Once that verification has been completed, then the draw funds are wired to the bank account you've listed with the crowdfunding platform, typically with a $200 or $250 fee for the inspection, and then you're ready to go. For your next phase, you can do the same thing. Again, 24 hours from the submission of the request for the rehab draw, as well as receipts if required, and the inspection, you'll get your second draw, your third draw, and so on. So very quick, very efficient, painless process, both on the servicing and rehab draw process for your next crowdfunded rehab loan. Thanks again for joining us here at the REI Classroom. My name is Nav Athwal, founder and CEO of Realty Shares. See you all next time.
Homevestors, the We Buy Ugly Houses folks, is a franchise system of hundreds of real estate investors that have purchased over 65,000 houses. If you'd like to learn more about the most powerful real estate investing system in existence, whether you're a pro looking to take your business to the next level, or whether you have no experience at all but a burning passion to be successful in real estate investing, please visit flipnerd.com/ugly to learn more. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of FlipNerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at FlipNerd.com. Please check out the FlipNerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at FlipNerd.com/shows, or simply search for FlipNerd in the iTunes Store.